I'm Chris Preston.
And I'm Brett Zimmerman.
Welcome to Street Check, the best two-person podcast in the history of Cabot Wealth Network, which has been delivering investment advice to individual investors for more than 55 years now. Brad, happy Valentine's Day. We're both in our Valentine's Day colors. This is supposed to be a pink shirt. I don't know if it's showing up very well. I
Oh, is
tried.
it? I thought that
Yeah,
was a white shirt.
it really looks like a white shirt on camera. It's vaguely pink. But I tried, not much of an effort by me. But I know Valentine's Day is the tradition in your household is means chocolate fountains, right? Chocolate fountain that you of your creation.
Well, it's not of my creation. I think chocolate fountains have been around for decades at least, maybe not hundreds
But
of
do you
years, but
buy the chocolate fountain or do you like create
we,
one?
so we got, when my wife and I got married back in '08, so many, many years ago, we registered for a chocolate fountain. It was just like
Oh, that's
a Impulse, Macy's, Target, one of those places kind of thing. Um, and because it's so it's wasteful and it's a pain to clean because you have to put like 2 bags of chocolate chips and oil and other chocolate in there, and then you need a bunch of like junk food to use it with. We only ever do it like once a year, and it has just sort of landed on Valentine's Day. So it is, I think, the only like real family tradition that we have is chocolate fountain on Valentine's Day. We've got
yeah.
marshmallows and Rice Krispies and pretzels and strawberries and pound cake is the wife's favorite. We do that every year, and then my sink gets destroyed by chocolate, and then
Yeah.
I put it away and bring it out the next year.
It sounds like quite a tradition. You're more festive than you let on with Valentine's Day.
Yeah,
You pretend to be the Scrooge of Valentine's Day, but I don't think doesn't sound like you are.
Scrooge. I'm the Scrooge of all holidays.
Or yeah, all days. Uh, yeah, we're celebrating our Valentine's Day by taking our 10-year-old son to his basketball game tonight. So that should be equally festive. Uh,
Are your kids still doing the Valentine's exchange where you get like 30 Valentine's cards and then like fun
our, our
dips or
our
whatever?
school is our their school has outlawed it.
Really?
Yeah, hurt feelings apparently.
Ah,
No Halloween costumes either. Uh, yeah, that's a whole
man.
other topic. I think that's a little overly sensitive. They always ask about it. They, of course, want Valentines and want to give Valentines, but
I
we
didn't
give them to
realize
them, they give them to us.
I didn't realize that Vermont had like such a strong contingent of fun police out there. I thought you guys.
I think it's specific to their district, or at least their school. My son's previous school did not have that such a policy, so I don't know.
God
Yeah,
forbid people don't like you in life. How would one ever adapt and survive?
yeah, I know. Okay, let's move on to investing. Tell people what we're going to talk about today.
We are going to talk about a hotter than expected inflation report. We're going to spend some time talking about earnings, which have been a godsend for the market. We are going to talk about tariffs. And then in the back half of the episode, we are each going to make a pick for the next 6 months with a visit from podcast producer Madison.
Yes, she has shown a knack for picking stocks purely based on the companies that she frequents in.
That's the Warren Buffett method, right?
Yeah, yeah, way to go. So we'll see how that goes. But first, as always, is our Defend the Take segment, and you're up today, Brad. Your take, for which you have 90 seconds to defend, is that the biggest winner of 2025 will be an AI company again, just not one of the Mag 7 companies. You have 90 seconds. Go.
Okay. So obviously the narrative for the last 2 years with the bull market has been big AI data centers, tons of NVIDIA chips, building out infrastructure. DeepSeek, which came out in about a month ago and towards the end of January, was sort of a shot across the bow that is not the only way to do artificial intelligence. Um, I think that the investing public and I think institutional money as well is ready to start moving beyond that infrastructure narrative and start looking for companies that are a little bit further down the food chain, specifically companies that are able to monetize technologies and not just monetize the infrastructure that those technologies need. We have seen hints of that. I'll say hints, but we've seen it pretty clearly with names like Palantir. We talked about that with Mike Santolo a week ago, where that stock's at like 96 times sales. Big Bear AI is another name that has drawn a ton of investor enthusiasm and interest lately. These are companies that are more focused on actual like artificial intelligent deliverables. The problem with Palantir and Big Bear is that most of their income right now is coming from government contracts. So there is still not a lot of evidence of private sector companies that are making money from the deployment of artificial intelligence or the development of artificial intelligence systems. I think that this is the year that that changes. I don't know that you're going to get names that are showing like a ton of profitability, but you're going to start seeing more and more
Time.
AI software names that are making money from deployment.
Okay. Almost hit the post there. Yeah, it's a good take. Yeah, I mean, the explosions we've seen in Palantir, in particular, Big Bear AI. I know you wrote about the other day, for the site. Um, and there's Mag 7 exhaustion clearly
Yeah.
now, which is a big part of why, while there's been a lot of good stocks under the surface lately and more breadth in the market, the major indexes, S&P, NASDAQ, have been, stuck in neutral basically for a month or
Yeah.
so, um, which you could also view that as a good thing, given all the news that which we're going to talk about in just a second. A lot of it not so great lately, um, but also the Mag 7 isn't propping up the market the way that it did, through most of the first 2 years of this bull market. So yeah, with the AI tailwind still there, and with Mag 7, sort of losing their luster, I think that's a good take.
Yeah, I don't even know. I don't think anybody knows what that name is going to be. I think Palantir is priced as if they are going to be the next big winner, but I don't think that that's a guarantee. Um, I think that we're going to get a stock that most of us have not yet heard of that's going
Yep.
to start getting some contracts with, I don't know, let's say, I don't want to throw like Tesla out there. Maybe medical tech. Tempest is a name that I know like got a lot of press lately because Pelosi bought some and they've doubled in like a month. They do AI drug discovery. I don't necessarily think that that's like going to be the go-to. I think you need the first company that comes out and makes like a really clear business case for improving productivity or builds a better mousetrap leveraging artificial intelligence. I think that's the kind of name that I'd be on the lookout for. And it's one that I think will be a very clear winner and it'll be abundantly clear. I just don't know what that name is yet.
Yeah. Okay, let's move on to our big three. Number one, as you mentioned, inflation came in a little hotter than expected, this month. CPI, at 3%. That is no longer in the magical 2% range, up from just 2.9%, but 3.3% on, excluding food and energy, so on a core basis. Month over month is really where is sort of most troubling. A 0.5%, from December. Fastest month over month growth since August 2023. Month over month in core, was it 0.4%, highest since April 2023. Um, and the Fed, they already were cautious when Powell last spoke. I think that's going to ratchet that up, another notch. Right now, according to the Fed Watch tool, people aren't expecting a rate cut, until July. Now, that's when a plurality, is, expected. There'll be the first rate cut, 44%, versus 38.6%, holding rates by then. And actually, another 17% think there'll be more than one rate cut by then. But, clearly, it seems pretty clear that the next cut isn't going to come until at least the second half of the year at this point. So the market didn't like that. Yields spiked a little bit, although they've come back down. Um, the market's been pretty resilient in the face of all this, but, what did you make of the inflation report and what it means?
Well, so I want to piggyback on the CME FedWatch comment. Yesterday, the market was pricing in a nearly 60% probability of no rate cut in June. Just in the last 24 hours, that has dropped to a 48.6% chance that
Hmm.
rates are going to stay the same. So I do think that Trump's sort of big one tariff announcement yesterday, which was threats of implementing reciprocal tariffs, has backed off on that a little bit. I mean, anything that raises the price of goods is, as far as CPI is concerned, is inflationary. So if
Hmm.
tariffs are less of a threat, and we'll get to that later, then I think the threat of a spike in inflation has pulled back. But we're continuing to see higher costs for longer. I know I hate saying higher for longer. We've probably said higher for longer than we've said any other phrase on this podcast over the last
Yep.
couple of years.
Yeah. It should be a
Um,
drinking game on the podcast.
Yeah, yeah. I mean, my expectations. I when we talked about Fed rate cuts a little while ago, I'm sort of inclined to think that they're not in a hurry and they're not going to be in a hurry. And we're back in that sort of waiting game where we need to see evidence, or more specifically, the Fed needs to see evidence of sustainable movement back on that path. So they were on the, hey, inflation is coming down, we're on the right track. Now we've been sort of diverted from that, so they're going to go back into wait and see mode. Um, Maybe we get a cut in June. I'm not betting on it. I think
Yep.
there's too much volatility in, at least in like headline risk from the current administration, especially when we hit like an April 1 deadline, I think is when tariffs come into play. That's a major concern. So they're not going to be in a hurry, but it's not, I mean, it's not like we got 6% inflation
Yeah.
in the latest report. I do want to flag a couple of things from from the latest report. The 12-month categories that, so 12-month inflation, the categories that really stood out, and will the relevance of this will become clear shortly. Auto insurance 11.8%, airfare 7.1%, rent, this is basically year over year inflation, rent 4.2 and housing 3.9. Those really stood out to me.
Hmm.
And the reason is tariffs. That's already where the inflation is. If tariffs get rolled out, all of those things become more expensive. Auto insurance gets more expensive when the cost of vehicles and replacement vehicles rise. Airfare gets more expensive when component costs and maintenance costs rise. Rent gets more expensive when building and repair costs rise. And housing gets more expensive when housing input costs rise, like building materials such as steel and aluminum.
Yep.
That I think is the boogeyman right now.
Yeah. And article on cited comments from Austin Goolsbee, Fed member, president of Federal Reserve Bank of Chicago, just said the latest inflation report is sobering. But he also, mentioned that which is true, it followed 2 months of more encouraging developments. I think the previous one had come in at least under the surface and core a little cooler than expected, which sort of ended the sell-off that happened or mini sell-off, I guess, that happened in December and first half of January. And the market had some momentum until really this report. Um, but, as you said, there's no question if we get multiple months like this, then the job is clearly not done. So it'll depend on what the data looks like going forward, whether this is um, just 1 month that's a little hotter than expected, or if it's start of a disturbing trend. I still am sticking to my two 25 basis point cuts this year. I think they'll just both be the second half of the year. How about you?
I, I don't know. I'm still inclined to go under.
Okay. Yeah, were you
This
one?
doesn't.
Were you one last week?
I figured probably under two. I mean, there's nothing about this that makes me rethink that
Yeah.
assessment that it's gonna that rates are gonna need to stay higher for a while. I mean, I don't know what the impetus to cut rates would be. A recession, right? Earnings growth rate, and we'll talk about earnings, is really, really high. It's not like the economy is suffering because of high rates right now.
Mhm.
Unemployment is low. But this is ostensibly what a soft landing should look like. So unless we have a recession or unless the employment picture drastically changes, I don't, why cut rates? Why risk inflation reaccelerating by making money cheaper?
Right.
I think that's probably where the Fed's head is at, especially when there's threats of things that could make everyday goods and items more expensive.
Yeah. So yeah, not a great week for from inflation perspective, but we'll just see again, just 1 month. We'll see where it goes from here. Number two, more positive note, earnings have pretty much been counteracting all the the bad news with tariffs and inflation, worsening inflation, DeepSeek, all that. It's been a good earnings season. We are more than two-thirds of the way through, and the average growth rate for the S&P companies is 16.4%, which would make it the best growth rate since the fourth quarter of 2021. Um, it hasn't been across the board. Certain sectors have performed better than others. The banks got off to a nice start. Um, we saw with Dutch Bros the other day. They had a really good quarter, but then there's been some flops. Tesla comes to mind in particular. But 16% is 16%, and right now that might be one of the things that's propping up the market.
Yeah, definitely. I mean, the reference to Q4 of 21 is obviously a little bit of a cup of cold water on it.
Yeah.
Right? Like we all remember what that was the tippy top for the market for a
Hmm.
couple of
Yep.
years.
Yep.
But to your point, Dutch Bros Q4 35% year over year revenue growth, 6.9% same store sales growth, and they raised guidance on their or they issued guidance for fiscal year 25 of 1.55 to 1.57 billion. So that's solid growth built in there. Robinhood was another one that stood out to me. They did 916 million in revenue, or $1 a share. The expectation was earnings of like 3 cents a share. So, or I'm sorry, no, that was not the expectation. That was their year ago quarter. They made 3 cents a share. So I do think that this is a little bit of a winners and losers market for earnings. Uh, Most of the big names are already sort of priced for perfection or priced with high growth expectations, but it's been pretty widespread. I'm just looking at something that I came across the other day. There was a report on the 20 companies with the largest quarterly sales growth and improving margins. A couple of the names: Micron Tech, STX, they make hard drives; GM, Western Digital, it's another computer company; Enphase, which is solar; Fox, the broadcasting company; AMD, Advanced Micro; Intuitive Surgical, right? They are a medical tech company, but they're not a tech company.
The
Meta
Da
Platforms.
Vinci surgical system. Yeah.
Yeah. Yeah. They're a name that I think people have read about here. Let's see. NVR is a home builder. Netflix did it. Expedia, travel, right? So it's pretty widespread,
Yeah.
but it's winner. It's a game of winners and losers. Um, one, Go ahead. Sorry.
Yeah. I mean, it is, but I mean, yeah, you highlight, highest since Q4 2021 being a red flag. It's hard to compare really that era, COVID era, to now, where, there's supply chain catch up, after, issues for more than a year there. And so it might not be quite apples to apples, but I mean, I get your point. 11% was expected, 11.7% was expected for the quarter, and so far over 16%. So I do think it's been more good than bad, this quarter.
Oh, yeah, definitely. I
Yeah.
mean, this has been a great quarter for earnings. Uh,
Yeah.
I was reading something from Mark Hulbert, who writes pretty regularly for Market Watch.
Hmm.
I think he's got a Hulbert Financial Digest as
Yeah.
well. He unearthed or brought up something from a Polish economist, Michał Kalecki, called the Kalecki equation. This is a little bit in the weeds, but I thought it was kind of interesting. That basically says that government's deficit spending is really, really highly correlated to earnings. Um,
Hmm.
the premise being that it's excess money that is circulating in the system that goes to the private sector from the public sector. And there's a high degree of correlation between deficit spending by the government and profitability for private companies.
Yep.
If Doge is successful in cutting government spending, which I mean, as much as that's their stated goal, it doesn't appear to be their implicit goal, right? They asked for a $4.5 trillion debt ceiling increase. They're going to keep spending on the public dime. But if that is actually their goal and something that they build towards, Hulbert mentioned maybe as much as a 38% reduction in the S&P 500 because of the amount of earnings that would get backed out of it. So I don't think that's what happens. I don't think the tech billionaires are actually interested in reducing the value of assets.
Yep.
But in the event that we do see really severe government deficit spending cuts and we get back to quote, closer to a break even or even maybe operating with a surplus, private sector earnings could potentially take a hit later this year. For the time being, though, I think earnings continue to look good.
Yeah, if that something like that were to happen, I'd be surprised if it happens by this end of this year. Seems like it'll be a process. And I too doubt that, the big tech moguls, um, who are, are all sort of kissing the ring with Trump now. I don't think that they're going to have the appetite for that kind of earnings drawdown, and market drawdown. So, yeah, we'll see. Let's move on to number three in our big three, tariffs. More news this week: aluminum and steel tariffs of 25%, imposed. Impacts Canada, Mexico, Brazil in particular. Steel, that was good for steel producers, at least initially. Nucor shares are up 5-6% in the immediate aftermath. Cleveland Cliffs up 18%, Alcoa 2%. But for the downstream buyers, not such good news. They're the ones where higher prices are bad for them. As in terms of how it might affect the overall market, this is not something new. This is the 25% tariffs on aluminum and steel in Trump's first term, and yet the market, as we mentioned on here, did quite well under Trump first time around. And then there was yesterday. I was doing a webinar, so you could speak more intelligently than I could. You watched the press conference about. Seemed like a bit of a nothing burger, right? Well, how did he phrase it going in? The
It, so
reciprocal tariffs, yeah.
they did not live stream the conference. It was set up as a live stream and then sort of never materialized, and it just matriculated through the press. It was set up as the big one, right?
Mhm.
Like his big
Right.
announcement. And the reason that we hit fresh highs at the close yesterday is the big one was just he's going to direct relevant government agencies to look at implementing reciprocal tariffs for even things such as imposition of value-added taxes by importing countries. It was very much a nothing burger when the announcement was made,
Hmm.
and it does seem to be consistent with the market calling his bluff, where you sort of you take him seriously but not literally, I think is the way it's been positioned. So it doesn't seem like there's a huge appetite to implement all these tariffs. It very much does feel like more of a negotiating tactic than a policy position, or at least a strong policy position.
Hmm.
The fear is that you call somebody's bluff until they're not bluffing, right? Like steel specifically, 40 we get 40% of the steel we use in the country from Canada and Mexico.
Hmm.
Building an infrastructure, use 50 domestically, we use 52% of our steel for that. Aluminum, we use in housing, aerospace, automotive. So all those places in the inflation report where I was calling them out, those are the ones that would be and will be hit by tariffs. And the problem is you can't just like ramp up domestic production. Um, there's too much of an infrastructure build out. You'd be looking at like years of capital investment to expand your steel production when this administration will last at the most 4 years. Alcoa acknowledged that. Their CEO said that the fix is not to ramp up production, it would be rerouting how they move assets around. So instead of sending stuff from Australia to the US, they would send it from Australia to Europe, and then they would just reshuffle their supply chain a little bit. You can't just turn on the steel machine and have steel all of a sudden. You're talking about mining and transportation and smelting and pouring and forming and like all the equipment needed to do that. Even if the end goal was to like drastically ramp up domestic material production, you can't just do that. So the market is treating it as if, hey, we're all gonna white knuckle it and we're gonna make our way through these threats for the next 4 years, and then we'll hopefully maybe get back to business as usual.
Mhm.
Because the alternative is that you have to sort of drastically reprice all of your base expectations. So it's either really terrible or it's a bluff. Um, like if you ban the import of steel or aluminum, something like that would be catastrophic. This is we're all going to sort of get along and get by.
Yeah. And like I said, similar tariffs on steel and aluminum first during his first term, and the market did okay. I think the most the tariffs that are out there that have the most potential negative impact on the market are the ones on directly on Canada and Mexico, 25%, which were delayed by a month. Who knows if they'll ever happen? Maybe they're, just a threat about, border security and fentanyl and whatever. Um, but I think if those came back into play, might be something that actually, weighs on share prices.
Well, and
Because China, similar, same first time around. There were tariffs on China, and again, the market climbed, and that's what's happening now.
yeah, and rolling it back into the inflation talk a little bit, the easiest fix, since you're not, I mean, you can do the reroute like Alcoa said, but you can't really change your production process or your supply chains that much. The easiest fix for what is maybe 3 years of this or 4 years of this is you just pass along those higher prices to consumers.
Yeah,
So the easiest fix to the threats of tariff is more inflation. That's part of why, my Fed cut expectations are still low. Like,
yeah,
if we don't get the tariffs, great. If we do get the tariffs, the easiest fix is to juice inflation by passing costs on to consumers.
yeah. And I think this is where Trump's own self-interests counteract one another, where I believe this is where I think that the Fed will cut more than once, because he said he wants the Fed, Fed needs to start cutting more. Um, but if his tariffs are the thing that are preventing that from happening, that's why I have a hard time
Yep.
believing that a lot of these tariffs will, at least the most damaging tariffs will really be either instituted or stay in place, to the point where the Fed has to hold rates, for the next year or whatever.
Yeah, that's the hope, is that he's bluster and bluffing, and that these are a bargaining chip more than anything else.
Right.
It does benefit his self-interest, as you said. It benefits the interested parties, we'll say. Um, you know, Capital structure and billionaires and like everybody that has a vested interest in the outcome of this.
Yep.
They benefit most if this is a bargaining tactic and nothing else. But we'll
Yep.
see.
Okay, we'll get to our stock picking segment in just a second. First, I want to tell you as usual, we have a special offer for listeners of today's or viewers of today's podcast. It's my own stock of the week investment advisory. It's a weekly newsletter out every Monday, or Tuesday next week because President's Day is off, market holiday, where I pick one of the best stocks from most of the other Cabot newsletters. So pre-approved by many of the people who joined us on the podcast last week. Mike Santolo, selected in his growth investor and top 10 trader advisories. Tyler London, through his Cabot Early Opportunities Advisory. Cliff Droke, Cabot Turnaround Letter. From others, we have a cannabis newsletter. We have a dividend newsletter with Tom Hutchinson, global investing newsletter run by Carl Delfeld. So I get to pick one of those every week, and it's a portfolio of those stocks. I currently have 26 stocks in there. And for today's listeners only, it's 50% off the normal price. It's $747 for the year. Usual price is $1,500. And you can try it out for 30 days, 100% money back guarantee. And again, you save 50% off the normal price by going to cabotwealth.com/street. And we'll have a link to that in the summary on our YouTube page, cabotwealth.com/street, to sign up for Cabot Stock of the Week for 50% off the normal price. Okay, now let's bring on producer Madison Robertson, for our special stock picking. Oh, you've got your
Hey,
holiday, your holiday.
I did.
Yeah,
It
Valentine's
is
Day,
a
right?
holiday. I
It
don't
is.
know
I
why
know.
it's a holiday, but it is a holiday.
Harlow, my daughter, was arguing with me to the death this morning that it was a holiday. It's like, well, you're about to go to school. You need to go get dressed to go to school. She pulled out her dictionary that they just handed them and said it's not a legally recognized holiday, but is an informal/romantic holiday. So she had me.
That's amazing. I like her.
Yeah, I do too. Okay, so this was inspired. I think a couple months ago, we asked you, just maybe off the cuff. I can't remember. For a company that you like, public company that you like or frequent. Um, and you mentioned Etsy, which
Mhm.
it has been up and down since, but I've since then I've seen a lot of analysts, pick that for their favorite stock for the year.
Mhm.
I was on a podcast, the Money Show podcast, and the first stock that this other guy mentioned, I can't remember his name, I apologize, but was Etsy, and he went into depth. I was like, all you can just say, like Madison said, is like, I like Etsy because it's a good site. So we figured it'd be a good exercise. Brad and I both pick stocks we've done way too much research on, and you just pick a company, public company, that you like going to, and see who does better. I think we're going to take this through, Brad, what did we say? Through midpoint of the year, end of June?
Yeah.
Okay.
Am
Um,
I exempt from, did we talk about this from the hot sauce
I knew you're gonna.
episode? Because
Well,
we have,
you hold the keys to that since you do
I
the
do.
you could put
I
in a
do.
mild or but who knows, you might beat us. We'll cross that bridge when we get there. Um, but let's start with you. What's the company that you like? I think we
Um, well, it's not new, and you guys already mentioned it, but Dutch Bros, I think I will, if it's not crafty, then it'll be coffee. It'll always be like one or the other for me.
yeah.
So I think Starbucks is kind of overrated. We've got Dutch Bros around here in Nashville, and it's the best.
So all drive through, right?
Hmm.
So
Yeah,
how does it work? Like, how long is the line at the Dutch Bros where you go usually?
not bad.
Not bad.
So it's like it almost looks like oh my God, like a shipping container kind of thing that they've turned into a coffee shop. And then they've got both sides for drive through. So it's kind of like a
Both
Chick-fil-A
sides.
situation where they have the two lanes, except the two lanes go to either side of the little box. So it goes
Right.
really fast. The menu is endless. We've got
Really?
energy drinks. Yeah, they've got all kinds of everything for
Like
everybody.
lemonades and stuff.
Yeah,
Yeah. And the coffee good?
their coffee's the best. I love their coffee. I do wish they were closer. Our closest one is like 25 minutes. Um, so I've
Well, there
got some
might be one
others.
closer soon. They're expanding. I just have some numbers on this just to back you up here. And it's unfortunate that we're recording this today and not yesterday, but yesterday the stock was up 29% after reporting earnings. So if you had done this a day earlier, you would have pretty much already won.
Yeah.
But They added 32 new stores in the fourth quarter, now up to 982, with a goal to get to 4,000 in the next 10
Wow.
years or so. I think they added 160 stores nationwide last year. They're up to like 18, 19 states. Um, Grew sales by 38%. Pretty clear that they're growing fast and faster than people expected, which is why the stock was up so much yesterday. But yeah, you may soon have one near your house at the rate that they're expanding. Maybe you'll
I
even get one here
better.
in Vermont. There's not a single one in Vermont right now.
Yeah,
I need to
it's
come to
the
Vermont.
closest. It is the closest retailer to my house. My kids walk and bike there. My daughter loves it.
What a
Um,
You
dream.
walk through the drive-through.
ours, no,
They have
ours
a
has,
walk-up window,
There's
yeah,
a
ours
walk-up.
has
right?
a walk-up window. Um, I thought their coffee was fine. Um, so just my
Whoa,
counterpoint to
Brad has
everybody's
something.
enthusiasm. Like my
Brad,
coffee, I drink
Brad
black
doesn't like
coffee from
things
a,
though.
Brad,
no, I don't. It's
no, he
easier that
doesn't.
way. Um,
Yeah.
no, so my daughter loves it. My son likes it. I like their pup cup. If you go up and you ask for a pup cup, a dog coffee, they give
Uh-huh.
you dog treats with whipped cream on it
You like
in a
that
little
for
cup.
you?
Yeah, yeah, for
You
me.
you eat that with the dog treat in it,
No, I give that to my dog.
but you eat the rest of his coffee.
No,
You
no.
share coffee with your dog. That's what I collected
I
from that.
get, look, my dog is very spoiled. He does tend to get like a
Sure.
taco if we get Taco Bell or a cheeseburger if we get McDonald's.
That's
But
incredible.
I do like that as a fun twist and a like a service priority item where it's like, hey, people love their pets. Let's offer something that they'll really
Mhm.
appreciate at no cost. It's not a revenue driver, but it is a loyalty driver. Um, I think it's a great little spot. So I like your pick.
Yeah. Sounds like a great. I mean, full disclosure, I've been high on Dutch Bros for a while. Even though I don't, I've never been to one myself. Sounds like a wonderful place. So just to timestamp it, stock is at $81.83 as of right now. So we'll measure from there. Down 2% today, so that's probably helping you a little bit at least. Okay, good pick. Brad,
I
you want to
just
go
picked
next?
it on gut too. I didn't do my research. I didn't know all that stuff from
Oh, this is
yesterday.
why
So
I'm
look at me
honestly
go.
rooting for you to win this, just to show, there's that experiment years ago. It's one of the, it might have been the Wall Street Journal or somewhere did an experiment where they had monkeys point to brought in monkeys to point to the companies that they like or logos
Mhm.
they like or whatever it was, and did it against professional money managers, and the monkeys won.
I'm fine to be the monkey in this
Not comparing you to
scenario.
a monkey, but
No, it's fine. I'll take
yeah,
it.
yeah. Okay, Brad, what's yours?
All right. So mine, it's sort of a like I know I said that I didn't think that any of the Mag 7 are going to be the best performing stocks of the year. Um, but it is actually a Mag 7 pick. It's Meta. Um, so Meta Platforms, Facebook, right? I think they've traded up for 19 of the last 20 days. They are up 39% in the last 6 months. They're up 23% in the last month. They are up 2% in the last week. They are flying high right now. The reason that I like them is their model and the role that I think they can fill in what is that changing AI narrative that we talked about earlier. So their Llama model is an open source artificial intelligence model. You can use it to train smaller models like DeepSeek. My understanding is that DeepSeek was partially trained on Llama. They also have 3 billion users globally. And there are parts of the world where when you say the internet, what you mean is Facebook. Uh, Meta and Facebook were subsidizing phones in parts of the global south so that Facebook would come pre-installed and pre-loaded. There are huge swaths of the globe where Facebook is the internet. That is a ton of user data. It is a ton of users. Where I think it's the most beneficial is with the Llama open source nature, where what, say, a developer can do is they can use the open source version of Llama. They can run it locally to develop their software, whatever they're going to deploy, whatever new agent or tool they're going to build. They can do all of that locally at essentially no cost. And then they can start running that off of cloud providers so they can scale up immediately. The only thing that they have to pay for is cloud usage, and they have to pay for Llama tokens. So the tokens to make inquiries of their artificial intelligence, right? So anytime they pull data from Llama, there's a fee there. It's basically building out a big sandbox and then putting a toll booth on that sandbox. Look, if Llama comes out, if like Llama 5 comes out or 4 comes out or whatever the next, whatever their iteration comes out and totally falls apart and it's an absolute failure, then this is a really big, expensive bet that falls short, like Meta did with what the metaverse, right? Remember that? So
Yeah.
there's a possibility that it's an abject failure, but they are building an ecosystem. They are building a sandbox that's sort of right place, right time for what I think the market is interested in for the next phase of artificial intelligence. And maybe AI never turns into anything. I still have my doubts, but uh, I think they are definitely right place, right time. I really like at least for the next 6 months, probably for longer than that. It's going to depend somewhat on outside factors and how much investors are willing to continue throwing money at AI, how much big companies are willing to continue spending on it. But that is my pick as Meta.
Okay. Trading at 7.35 a share right now. So mark
I
that down.
would not be surprised if they break 1,000 a share this year.
Ooh, that was a hot take.
The 50% run up from where they are now.
Write that down. Write that down.
I
Or no,
got
it'd
it.
be what, 40?
Oh yeah.
It'd be like a 40% run up from where they are now.
Would not be surprised. By the 6 month mark or by year end?
By year end.
Okay.
If they ran up, I mean, that would put them in the conversation with Nvidia, Microsoft, and Apple as the most valuable publicly traded company on the planet.
Mhm.
That also would not surprise me.
Yep. Okay, I'm going chalk as well. Another Mag 7 stock, not very creative, but Netflix that's doubling down on, I think we had our Mag 7 episode, was that like middle of last year? We both agreed that Netflix was
Yeah.
going to be the best performer, and it was the second half of the year. I just think there's a lot of momentum there, not only in the share price, which speaking of share prices over 1,000, just crossed 1,000 per share barrier earlier this year, up already year to date more than 17%. But the reason I'm selecting Netflix is this: live sports, live sporting events, I should say. That made a big difference already. They really dipped their toe into that for the first time in the fourth quarter with the Mike Tyson Jake Paul match. Do you call it a match? Exhibition? I don't know,
Yeah.
but whatever it was, it
It
drew
was a
108.
sanction. It was a sanctioned match.
Yeah, yeah. It wasn't a great match, but undercards are really good. Uh, Drew 108 million live viewers globally. That was in November. And then on Christmas Day, they had two NFL games that averaged, I think, around 23 million viewers. I think, and they also have WWE now. I think they have Monday Night Raw on there, right? So I think this is, Netflix it's been their live sports has been their one blind spot for a while. Meanwhile, Amazon has had Thursday Night Football, NFL football. Apple TV Plus has MLB. Max has, with its Turner tie-in, has NBA and March Madness. So now Netflix, with all its might, the sort of the biggest, baddest streamer, is seemingly going to be competing there. And I think this is just the tip of the iceberg that, Tyson fight and NFL, they're going to do more, probably expand into other sports. And I think that's going to really broaden their potential. The numbers for the last quarter were eye-popping: 102% EPS growth, 16% subscriber growth, with a record 18.9 million new subscribers added. I think a lot of that's a lot of people who may, only watch sports, or they don't care about Squid Game or um what's that
Stranger
show?
Things.
Stranger Things. Yeah, why couldn't I think of that? It's been a while since they've had one or a new one, but couldn't care less about that. You're like, oh, maybe I'll get Netflix now because they're going to have NFL and boxing. Um, Signed up. And I think that's the start of a potential new revenue stream for the company. And I think I'm betting there'll be more news about, live sports, them getting into live sports in the first half of this year, which is why I think this stock price will continue to go up.
Speaking of,
Yeah.
this news is probably more for Brad than Chris, but there's a
Yeah,
new Love is Blind season that starts today, Brad.
I did see
Ne
that.
Never heard of it.
I've heard of that. It's
Yes, you have.
my wife watches, and I've seen some, and it's pretty garbage, but it can be kind of entertaining at times.
Super garbage and super
Yeah,
entertaining. That's why
yeah. You
Brad
heard the
likes it.
premise
He's
here,
just
Brad? It's
pretending.
Valentine's Day. We might as well tell him the premise.
You date these people without seeing them first. So there's like a wall in between like the dude and the girl, and they're talking, and then eventually the dude proposes, and then they meet once they're engaged, like face to face. It's like fall in love with their personality and not their appearance kind of message. And
And it almost
it
never goes well.
is so fun. Some of these when they first see each other,
Oh
like
God.
so awkward, so good. It's just
You can tell from the looks on their face right away if they're happy
mm-hmm,
or not. It's
mm-hmm.
so awkward. Um, yeah, it's
No.
Brad watches religiously. He's just pretending like he doesn't know.
That that sounds so terrible. Just getting like
come on, it's Valentine's Day. Get in the
the
spirit.
no, the social awkwardness, like the cringe. Like
Don't cringe.
I get a lot of secondhand cringe in the real world and in existence where I feel it very acutely. I do not want to watch a show where people are like making fools of themselves and embarrassed a lot. That would get in my feelings in a way that would be it just would be very unpleasant. I'm never watching that show. That sounds
Yeah,
Does
awful.
your wife doesn't watch
No.
it?
yeah.
It's
No,
What is your go-to Netflix show? You feel like a Squid Game guy.
we watch we watch Squid Game.
Nihilistic, a lot of killing. Yeah.
Nihilistic. It's anyway, well, we watched that one. I don't really watch a ton of TV. We just watched Beast, the Mr. Beast show on Amazon Prime. That was
oh,
actually kind of entertaining. That's
Really?
it's like real life Squid Game. But
Real
it's a
life
real
Squid Game.
yeah, it's a reality TV show where they narrow it down to like one person who wins like $5 million.
Do they
Uh
kill the others?
yeah, no, God no. No, it's just elimination games where they pare it down. We watched that with my daughter. She kind of liked it. She didn't like my commentary on it because I was very critical of the fake enthusiasm that everybody was demonstrating because it's a Mr.
not
Beast thing.
you.
Yeah.
Yeah, shocker. Uh,
Hmm.
but yeah, no, we don't. I don't. We don't do reality TV. That's a weird, rare exception. I guess we used to watch Nailed It, the cake video, the cake making show.
That was good. That one was cute.
I haven't seen that one. My kids love Is It Cake or Not, where they bring out things in
Mm.
different shapes that there's like three different cakes, but only one of them is actually cake, and they all look like it'd be like a shoe,
That's
or
funny.
Watch watch
a
Nailed It with
hammer or
your
something. Yeah.
watch Nailed It with your kids then. That there was
Yeah,
one like when my daughter was your kid's age, she and my wife watched it religiously. During the pandemic, Nailed It did like an experience thing where you could do like a live Nailed It with the the
cool,
chef, the host chef. And we did that,
cool.
which it was an absolute mess when they tried to roll it out, but it was pretty fun. But watch that with your kids. I bet your kids would really enjoy it if they like Is It Cake?
Yeah.
God, I can't believe that that's like a real TV show that we're
It
talking
was
about.
ridiculous. It's hosted by this guy from Saturday Night Live too. I was like, wow, I can't believe there's got to be something better he can do. But okay, Netflix right now 1,050 and even 1,050. So Madison, Bros, Brad, Meta, and me, Netflix. So we'll see. May the best person win. And we'll check in at the end of whatever our first episode is after the end of June. And we may make you eat hot sauce, Madison. We'll see. But
If I put it in there.
yeah. Right. I know you could easily fool us and just put water in or something. Um, well, thanks for doing that, Madison, and happy Valentine's Day. And Brad, good luck with your chocolate fountain. And thanks everyone for joining us. And we will see you next week.